You may have heard of reversal patterns, and you may have also thought, well, what are reversal patterns and how do I use these things to make money? Well, you're in luck because you came to the right place, because today we are going to talk about what reversal patterns are, and I'm also going to show you some examples on how you can use them in your own day trading, as well as some moves you could have caught using these reversal patterns. If you're new here, go ahead and hit that subscribe button. And then also, if you like anything in this video, go ahead and leave a comment below and tell me what you like, mainly because all of the engagement really helps this channel grow, and it also helps other people find this content. So if you don't know who I am, my name is Lakeisha Tomlin. I'm a former engineering manager turned full-time day trader, and now I help people become profitable at day trading, especially if they are new day traders. So in this video, if you're a new day trader, you're definitely going to learn a lot from this video. So go ahead, grab some notes, and make sure that you bookmark it so that way you can come back to this video and pick up all of the nuggets that are going to help you understand reversal patterns, and most importantly, how you can make money with these patterns. So what is a reversal pattern in terms of looking at the charts? Well, basically it's a pattern that you'll be able to easily recognize, and it'll tell you when there's a high probability that the price may reverse. So let's say, for example, you're looking at a chart and the price looks like it's going up. Well, you want to make sure that before you place your trade, that there's not already a pattern or a signal already present in the charts that are going to say, hey, this price is actually going down. Good luck placing your trade. So I've had that happen way too many times, and a lot of other people have said that as well, where when they place a trade, almost immediately the price goes down. So if it goes down a little bit, it's usually nothing to worry about, but if it goes down a lot, then it could be something to worry about. And that is why you really want to understand these reversal patterns. So if you're hoping that the price goes up, you want to be able to identify patterns that are going to tell you, hey, the price is going to continue up and it's not going to reverse. Or if you're hoping that the price goes down, you want to see patterns that where it gives you a warm and fuzzy feeling that you know that, hey, this price is going to continue to go down. It has a high probability of that based on these patterns that we are going to talk about here shortly. So that is essentially what a reversal pattern is. You don't want the price to go down when you're hoping that it goes up, and you don't want it to go up when you're hoping that it goes down. And that's all a reversal pattern is. So I'm from the show me state of Missouri, so I love to show people exactly what these things look like. So let's go ahead and go over to my computer. In this video, we're going to go over some examples of some of my favorite patterns, especially reversal patterns. So it's going to be 4 of them. And you may have heard of all of these, but basically it's going to be a really good game changer for you, especially if you want to level up your trading. Now, as far as different candlestick patterns, you may have heard of things like the rising wedge, the falling wedge, and a bunch of different flag patterns, and those are okay. But basically, I don't like to use those patterns as primary patterns, especially when I'm looking for reversals. And we're going to talk about my 4 favorite patterns in this video. So the first one I really like is the double top. And basically, it's going to be something like this. It's going to look like an M. And of course, these patterns are not going to be 100% when you're looking at these candles. So you have to use a little bit of imagination and creativity when you're looking for these different patterns. And for the double top, basically you want to look for the safest place to enter, and that's definitely going to be here at the neckline. So basically, it's not going to be perfect. It may be a little crooked or something like that. It just all depends on what is happening inside of the charts. So as you can probably tell, there is a double top here. Bam. And we're just using the Tesla example, and this is on the daily chart. So just know that you can find these patterns on any time frame. It doesn't matter. Just know that if you're using a higher time frame, it may take a little bit longer for these things to play out versus a shorter time frame is going to happen relatively quick, maybe in a couple of minutes, maybe in the same day. So it just all depends. But for a lot of these examples, we're just going to use the daily just because it's really easy to see. So we have this double top pattern here. And if we draw out our neckline, it's definitely going to be this low. It doesn't have to be the bottom of this. It could be kind of like an average of these two. I'm talking about this right here and this right here. So it could be an average of those. And basically, let's just go ahead and draw it out. So this is going to be the safest place for you to enter. And if we zoom in a little bit, and we could see that basically, we zoom in, oops. Okay, let's go like this. Okay, so if we can see right here that there is a bearish engulfing candle. And since we're looking to go short anyway, let me move myself out the way. Since we're looking to go short anyway, we definitely want to go ahead and set ourselves up for that. So let's just say hypothetically, let's see, short position, we set it right here on this line and we're looking for different opportunities. Actually, there's a couple opportunities. You could have did it here, you could have did it here, just multiple opportunities. So let's just set our stop loss there. And let's just say we're targeting this bottom here. Obviously, when we're in it, we won't see that this would be the bottom, but typically I like to target the next level of structure. So let's just say it's at this 2.56, mainly because I'm looking left and I see this gap area right here. So anyway, so let's just say 256. This is really, really nice. And it's going to take, what, how many days to play out? It's going to take about 9 days for this to play out. Well, actually not even 9 days. It's going to be less than that. It's going to be about 7 days for this to play out. So this would have been a really good entry. If you missed it here, you probably could have got it here, or maybe waited and got it again on this side, because this is kind of forming something here, not necessarily a double top, but basically that could have definitely been an entry and could have made you a lot of money, especially on Tesla, because at this point in time, December 2021, these prices were really, really high compared to the rest of the stocks. So it would have been a really great entry. So the next one that I'd like to talk about is a double bottom. You probably guessed this because we talked about a double top. So basically what you're going to be looking for is this W pattern. And of course, just like the double top, you're going to want to enter at the neckline. And obviously this is not financial advice, this is just me giving examples, but if you're interested in this, you want to look for these in terms of going long. So you're hoping that the price goes up. So once again, just like with the double top example, the double bottom is going to work exactly the same way. And let's just scroll and see if we see some really good examples. And just know these aren't going to be perfect. I see one right here. So once again, you kind of got to use some imagination because it's not going to be perfect. And then this just shot all the way up here. So this is really good. So basically, as you can see, here's our double bottom. And just know that they're not always going to line up perfectly, like in this example, but it definitely, once it broke this neckline, it just took off. So once again, let's go ahead and draw our trend line at the neckline. And what we would have seen if in this hypothetical situation, if we would have entered it, we would have seen, let's just say $76.65. And if this was an options trade, of course, this number will be multiplied by 100 because there are 100 shares inside of a contract. And this would have been almost an $8,000 trade. And this would have taken how long to play out? This would have taken about 11 days to play out. Definitely well worth the wait for $8,000 trade on Tesla. And this is just one contract. So hypothetically, if someone would have taken that trade a year or so ago, or actually this is a little bit sooner, this is in March 22, if they would have taken this trade with 2, 3, 10 contracts, however much money, they would have made a killing on this particular position, especially if they would have held it throughout this entire time, especially with this gap up right in here. So anyway, so that is one of my favorite patterns, and this is how I like to use it. And then let's clear the chart. So the next one is the head and shoulders pattern. So this basically looks like this, because it looks like head and shoulders. And to me, this kind of also looks like a crown, but the common terminology for this is going to be the head and shoulders pattern. So actually, let me straighten it up a little bit, mainly because if we go here, we have the one shoulder here, and then we have one shoulder here. And then we obviously have the head right here. So the best place to enter here is also going to be at the neckline, and just know that these aren't going to be perfectly lined up. So sometimes I've seen the neckline kind of go straight across, like this one looks almost perfectly. It's not going to be perfect, but straight across, or sometimes I've seen it where this is slightly higher, so the neckline would be kind of like this. Like this looks kind of funny, but basically it would kind of look like this. So the neckline will shift a little bit, but basically the idea is the same. So let me go ahead and clear these off. Oops. Remove drawings. Okay, got it. Okay, cool. Now let's look for a head and shoulders pattern just within this daily. Let's see. This is kind of looking like one. Like I said, you have to use some imagination here, and it's a little bit more difficult in the beginning, especially if you're new to identifying these patterns, because over time you'll get really good at identifying these, just like I am doing right now. I've had a lot of chart time, and it's not going to be any different for you. Just need to spend time on the charts. That's pretty much all you need to do to get good at this. Okay, so this one's a little weird. Let's just make it right here and then here. But basically, let's just line this up a little bit more. So this one had the neckline going a little bit in the opposite direction, especially because of this candle right here, but it's still a head and shoulders pattern. So we see the shoulder here, we see one shoulder there, we see the head here because this is the highest point that this candle got, and then it started closing lower. So basically it's kind of got two shoulders, but we kind of see this as one. So we see a head and shoulders here, and basically since this right here, it doesn't form a perfect neckline, the way I would have entered here would have been, I would have drawn my neckline right here. So let's go here. I would have drawn my neckline like this, and then once price broke this level, then I would have taken it short, and there would have been a perfect, or three perfect entry opportunities right here. This is if I was looking at this time back in February 21, and then let's just say hypothetically short, I did it somewhere along this line. So your stop loss placement is going to depend on what your style is. I like to give mine a little bit of room to breathe, but not too much. So it's kind of like a delicate balance. But let's just say I had a tight stop loss like that, and I wanted to target somewhere in this area. This would have been almost a 10 times my risk, which would have been amazing. And as you can see, it went all the way down here. Now, if I was taking this trade, I don't think I would have held it for this long. I probably would have gotten some money here and then maybe let a little bit ride, but I definitely would have taken most of my money here, especially at a 10 times my risk, which would be amazing. So let's just see how long this played out. So we're going from the neckline to about here, and there's some consolidation in here, but let's just do it at the earliest spot. I probably would have got out like here. So like 5 days. And then if you were bold and would have held this a little bit longer, this would have taken about 18 days rather, to get to this lowest spot. So you would have been holding this for a long time. But let's just say you did hold it. It would have been basically 22 times the risk, which is insane. And this would have been 77.81. So hypothetically, if there was a contract, I don't know how much that would have cost because it depends on a lot of different things, but basically this could have been almost an $8,000 trade here, which would have been incredible. Granted, it would have taken about 18 days or so to play out, but that's just one contract. So multiply that by 5 contracts, 10 contracts, whatever, however much money you have. Hypothetically, this could have been a really nice trade. So this is basically how I like to use the Head and Shoulders pattern. It's definitely one of my favorite reversal patterns in terms of entering the market and figuring out what could possibly work. So let me move this. So the next one that I like is the inverse Head and Shoulders. Basically, it's exactly how it sounds. It's the opposite of the Head and Shoulders pattern. And of course, it's not going to look this perfect, but when it comes to the neckline, the principle is pretty much the same. The safest place, in my opinion, is to enter at the neckline. And this is when you're looking for the price to go back up. So just like the Head and Shoulders, since this is the inverse Head and Shoulders, we have a shoulder here, we have the head here, and then we also have the other shoulder here. And this is seriously one of my favorite patterns, mainly because if I'm in a position, especially if I'm going short, and I like to use all the time frames, so I don't have a favorite time frame that I use, but basically if I see one of these patterns forming up and I'm going short, then that gives me an early signal to possibly get out of the trade, because if I see this pattern and I'm going short, that means I'm hoping that the price continues to go down. This pattern tells me that the price is going to continue to go up, possibly. I definitely want to take my money and run, because once it breaks this, there's a possibility that it can continue up. So this is the inverse Head and Shoulders. So let's just go ahead and see if we can find one of these patterns on the chart. Oh, actually I see one right here. It's maybe a little bit hard to see, especially if you're a new trader, but it's all good because you'll get good at this. So here is one shoulder, here is a head, and then here is another shoulder here. And then as you can see, clear as day, this broke the neckline. So this looks a little weird in terms of the neckline. It's actually doing something like this. All right, but basically what I would have been looking for is for the price to break this line right here. So let me get rid of this so it's not confusing. So I would have looked for a price to break this, and once it broke like it did right here, then I would look to either get out of a position that I am currently going short in, or look for long positions. It all just depends on what I'm looking for. So hypothetically, I would have done something like this and then targeted this area right here. That feels comfortable to me, and that would have been almost 10 times, or actually 8.5 times my risk. So hypothetically, depending on how I was trading this, let's just say if I had $1,000, this would have been an $8,500 trade, would have been really, really nice. And this would have taken, let's see, this would have taken about 11 days to play out. So of course you can find these patterns on lower time frames, and all of this information is definitely something that I wish I had when I was first starting. So if you love this information and you want to see more content like this, or if you have different ideas on things you want to see, then go ahead and leave a comment in the section below. And if you haven't already, like and subscribe to this channel and check out the videos that I have in order for you to increase your learning when it comes to day trading. See you soon.